Hey all, welcome to Share Track. This is Raj here, and today, friends, it's a very blingy topic. I'm going to talk about gold. Gold seems to be coming back into prominence again, and we haven't spoken about gold in a long time. There was a time when I had made around 3 or 4 videos in quick succession about gold because it had formed a cup and handle pattern, and I had made a prediction at that time that gold will reach a particular level. It didn't, but now it has. So let's have a relook at gold and why it is moving. I have my own theories, and I also invested in gold. So a little bit of gold bias might come through. Please bear with me. And also at the end of this video, do make it a point to put your comments in there. Do you have any gold in your portfolio? What percentage is it? What's your objective for holding gold? And how do you prefer to hold gold investments? So with that said, let's get started. Welcome back, friends. Gold prices surged to near record levels in February 2022, passing the $2,000 per ounce mark as Russia invaded Ukraine and pessimism prevailed in the markets. The bullishness, however, was short-lived as the commodity embarked on a downward trend, falling over 20% by September 2022. The fall was driven by a strong US dollar on the back of raising interest rates, the rate hikes which came in quick succession from the US Federal Reserve, and as a result of which US dollar became strong, and gold is denominated in dollars, so gold became weak. So now the gold has got the opportunity to go the other way around as the interest rate starts falling. Even the prospect of falling interest rates and impending recession can push gold further up. In late 2022 and first weeks of 2023, however, the precious metal saw a trend reversal, enjoying a series of higher highs and higher lows. In other words, it was on a bull channel. The gold's price rose by 14% from November 2022 to early February 2023, supported by a less hawkish tone by the Fed's Jerome Powell, plus the reopening of China's economy and hence stronger jewelry demand boosted the price at the start of 2023. After slumping moderately in the late February, gold broke out once again, this time passing the 2,000 mark for the first time in over a year. The surge in gold prices happened amid the turmoil in the banking sector, resulting after the Silicon Valley Bank collapse, forcing investors to seek safe haven assets. Silicon Valley Bank's collapse was the most prominent banking failure since 2008 financial crisis. The struggling bank had heavily invested in US government bonds, which have declined in value, and raising interest rates. To cover customer withdrawals, Silicon Valley Bank had to sell off the bonds, resulting in liquidity issues as more and more clients withdrew their funds due to worries about liquidity. Troubles in the banking sector combined with Credit Suisse acknowledging material weakness in its booking, which led to the rescue takeover by rival UBS dictated by the Swiss government, a bid that resulted in $17 billion of Credit Suisse bonds turning worthless. This has caused further alarm in the markets, damaging investor confidence in banking stocks. Out here in the US, Jamie Dimon is also saying that many more small banks are likely to collapse, and to restore the sentiments, several central banks, including the US Fed, European Central Bank, and the Bank of England, have taken a joint action to inject USD liquidity into the market, echoing the steps taken by the 2008 financial crisis and COVID-19 outbreak. Countries around the world have used gold as a physical asset to back the value of their fiat currency or paper money for hundreds of years until we came to the Bretton Woods system. The gold standard was officially abandoned in 1971 when the US no longer allowed converting the US dollar to gold, an attempt to curb inflation. While the gold standard is no longer used as a basis for international trade, many countries still keep gold reserves for insurance. In case of an economic crash, the gold held by each country's national bank is referred to as the gold reserve. If the fiat currency system collapses, the country's gold reserve allows the government to still be able to repay debts and issue money. Of late, many countries have increased the purchase of gold. Here I have a table that shows how much gold the top countries hold. From an individual perspective, as you can see in this particular table that I have here, these are the countries which have purchased maximum amount of gold in 2022. Topmost seems to be Turkey, which is battling an inflation crisis and it has bought around 148 metric tons of gold, followed by China, Egypt, Qatar, Iraq, India, UAE, Kyrgyzstan, Tajikistan, Ecuador, and unreported portion is 741. These are all just 2022 purchases. And if we were to look at the gold reserve of the top countries, and if we were to look at the gold reserve by country, then you can see that United States by far leads everybody else with 8,133 metric tons of gold, followed by Germany, Italy, France, Russia, China, Switzerland, Japan, India, and Netherlands. Among them, they form the top 10 countries with the maximum gold reserves. And of course, I have shown you the countries which have increased their holdings in 2022. So overall, it seems that the central banks are migrating towards increasing their gold reserves. But from an individual's perspective, like we are retail investors, there's an old saying that one should keep 5% of their investment in gold. I don't think anyone is following it. With the advent of Bitcoin and crypto, people have been assuming that Bitcoin will do the job of gold going forward, as it needs to be mined and has a finite number of coins. We have not seen undisputable proof of that thesis so far. An individual has a few popular options to own gold. The first is physical gold, and this involves spending for security to keep the gold safe. Either you have to keep it in your home and have some security and insurance, or you keep it in a bank locker and you pay for the locker. One of those two things has to be done. The second is to buy a gold-backed certificate, but that not only involves paying for security, but also the risk that there may not be enough gold to back all the issued certifications. Friends, scams have happened before, so one has to be careful. The other niche option is that of buying collector edition of gold coins from National Mint. These are gold coins of limited mintage, such as 500 coins to commemorate a particular event. Most of these coins are 14 karat gold, but the value you are looking for is the antique value and the rarity premium. And of course, the 14 karat gold price will also move along with the 24 karat gold price. And in this category, first, the kind of coins that improve in value over a period of time are those which are category first or first of its kind. For example, if a mint for the first time introduces a gold coin that has got color in it or enamel in it, then that is going to have a more antique value. And of course, the basic gold that is there in it will also improve its value as 24 karat gold improves its price. And the other area where you could have advantage in investing in mint gold coins is when there is any mistake. Mistakes in any kind of currency always increases its value, and the same is applicable for gold coins and silver coins as well. Minting mistakes have huge premium. It's also possible to buy pure gold coins from Royal Canadian Mint or the Royal Mint of UK, or even for that matter, there are other central banks which make certified gold coins. Those are also pretty good, and they are 99.9% pure. And they hold the value and they move along with the market price. The problem with all this physical holding of gold is that when it comes to selling, you may not get maximum value and will have to use an auction house to sell it. From that aspect, owning gold-backed ETFs would be the best option in my opinion. Well, friends, that satisfies the gold bug in me, but I have invested both in gold and silver bullion, as well as Royal Canadian Mint gold and silver coins of limited mintage. I also have old currency notes in my collection from the British India times, and the old Indian coins from the various kingdoms. For example, I have 2 sets of Winter Olympic gold coin collections issued by the Royal Canadian Mint for the Vancouver Olympics. I hope to auction them when I turn 70. Every once in a while, we go to see them in the locker and just admire how they look like, and think about what profits we'll make when we auction them at a later date. But coming back to another important concept that I want to talk to you guys about, gold standard is being looked at very romantically by many people with nostalgia who don't like fiat currency, and the fact that the fiat currency has to go through a book of records and sanctions can be done. But when it comes to gold-backed currency or gold standard, there is a very big drawback. There is a finite amount of gold, and the economy is only going to grow bigger and bigger. Right now, we have a global economy, and soon we'll have an intergalactic economy as things keep on growing and as we go to other planets and all. And having a finite limit of gold is not going to be of any help. And again, I'll go back to my Trekkie mindset, and I'm thinking that in the future, we may not even need currency. People are going to work for the benefit of the society. Everybody will be taken care of them. You may call it communist or whatever, but there is going to be no economic paradigm in there. It's going to be the use of science, technology, and human efforts to better the lot of everybody, and everybody will get everything, and everybody can excel in whatever field they want to. And that's where I think humanity will go as we evolve and become a much more humane and considerate species, and much more intellectual species. And all this concept of individual responsibility and nanny state and all those things will just disappear. So that's my biggest hope. And till then, I'll hang on to my gold. I can't see those things happening in my lifetime. So in case of an emergency, you can always carry your gold with you. Many of the people who got displaced from war zones have been able to reinstate their life in new lands after they flee their homeland, because they were fortunate enough to have invested in gold, and they're able to carry the gold with them. And gold goes across borders and holds its value, and gives you a fresh start in a new country. If for some reason you had to leave the place where you're living right now. So with that, my friends, I'd like to bring this video to an end. I hope you enjoyed this segment. I wanted to do this for a long time. Please give me your comments. Do you have gold in your portfolio? What do you think about gold? What percentage of your portfolio is gold? And your experiences with gold, whatever form you might have bought it in. With that, my friends, I'd like to say bye. And of course, friends, if you want to support this channel, if you like what I'm doing out here, and if you like the energy that I'm putting into these videos, you can always support the channel using the Super Thanks feature. I have not yet started our membership feature. That is for after we cross 5,000. But right now, you can help with Super Thanks. And with that, I'd like to end this video. Bye for now.